Hey guys, it's CJ Investing here. Welcome back to my channel. And today I'm just doing a short video. I just want to talk about some stocks that I may be interested in and some stocks that I'm currently buying right now. As you can see, as of the market close on Friday, there was a little bit of red, but the market as a whole was up. And I'm viewing this through Fidelity Investments app. You can go and sign up and download it for yourself. It's a great app. They have a great interface. It's very professional, and they have great customer service. You can call them up at just about any time of the day, and they'll take care of whatever you need. But as you can see, the Dow was in the green on Friday as of market close. The Nasdaq barely closed up 0.01%, and the S&P 500 is up 0.48%. The Dow Jones is up 0.59%. So the Dow was leading the markets. And something I find interesting about this is I normally buy, it's usually around either 11, 1 p.m. But most of the times I buy before close at around like 3:30 to a little bit before 4 o'clock when the market closes. Because a lot of times during that last hour or those last 30 minutes, the market go down or the tank. I don't know if that's because of option contracts or if people are just trying to get rid of their positions before the weekend because they don't know what news might come out over the weekend. I noticed that trend in the market. You might get a cheaper discount, but it's not really worth it to wait if you really see a stock that you like or a company that you like at a great deal. You should go ahead and buy it. You shouldn't wait thinking the market will go down. That's just something that I do sometimes and that I noticed that was interesting. But this is my main stock watch list. It's my default stock watch list, so I don't have to log into my account to view it. So, as you can see, Adobe, Walgreens, Google, Microsoft, Texas Instruments, Visa, Intel. These are all the stocks that I'm interested in right now. Some of these I own, like I own Walgreens Boots Alliance in my Roth IRA, as well as Visa. And a stock that I just purchased is Intel. And I purchased Intel at, I think it was around $27 when I started my position. And I kind of dollar cost averaged up because I still believe that it's at a great deal. It's one of the best deals right now in the stock market, along with Walgreens Boots Alliance. As you can see, it's very close, or it's closer than a lot of companies to that 52-week low of $24.59. As you want to buy companies that are close to your 52-week low or at it, that are great companies and they have great financials. So they pay a dividend. As you know, I'm a dividend investor. I look for companies that pay dividends, even if it's a small one like Visa. But as long as they're paying a dividend, as long as they're growing that dividend, and they have great financials to go with it. Their dividend rate is 36 cents per share, payable on December 1st. Their yield is 4.88%, which is a pretty decent yield. Earnings per share is a little bit low at $3.23. Price to earnings ratio is pretty low at 9. Now it's went up a little bit, but I still believe it's at a great discount. A really great discount. As you can see, analysts are valuing at $38.48. I think it could be valued much higher than that. As you can see, their revenue comes from 40% from Data Center Group, 36.9% from Client Computing Group, 11.4% from all others, 11.2% from Internet of Things Group. So it kind of shows you, and this is the benefit of having Fidelity. It gives you all this useful information. As you can see, some news right here. And here you can see the company profile, a little bit about Intel. So Intel Corporation engages in design, manufacture, and sale of computer products and technologies worldwide. The company operates through CCG, DCG, IOTG, Mobileye, NSG, PSG, and all other segments. It offers platform products such as central processing units and chipsets, and system-on-chip and multi-chip packages, and non-platform or adjacent products, including accelerators, boards, and systems, connectivity products, graphics, and memory and storage products. The company also provides high-performance compute solutions for targeted verticals and embedded applications for retail, industrial, and healthcare products, and solutions for assisted and autonomous driving comprising compute platforms, computer vision, and machine learning-based sensing, mapping and localization, driving policy, and active sensors. In addition, it offers workload-optimized platforms and related products for cloud service providers, enterprise and government, and communication service providers. The company serves original equipment manufacturers, original design manufacturers, and cloud service providers. Intel Corporation has strategic partnerships with MLIA to develop and apply advances in artificial intelligence methods for enhancing the search in the space of drugs. The company was incorporated in 1968 and is headquartered in Santa Clara, California. So that's a little bit about Intel if you didn't know. The total revenue as of I think that's September 30th was $69.54 billion. Institutional ownership 59.53%. So they own a decent amount of this company, the big corporations. The shares outstanding are 4,127,000,000. So they have quite a bit outstanding. The price to earnings ratio, as I said before, is around a 9. Price to book, very low at a 1.23 times. Profit margin, pretty low, 6.64%. And the total debt to capital or equity is 28.28%, which is really good, meaning they have more cash or equity than they have debt. That's always what you want to look at. That's one of the things that you want to determine of the company being able to survive, because the dude from Everything Money says it's hard to go bankrupt when you have more cash than debt or you have very little debt. So as you can see, their recent quarters, all of their quarters, they've been beating on earnings despite their current position that they're in right now. They're still suffering from the chip shortage that's hurting them, as well as inflation is hurting them. They're trying to compete with all of the other chip manufacturers out there like AMD and MU, NVIDIA. And they're an older company. They've been around for a very long time. Every time I hear Intel, I associate it with Dell. I just can't say Dell or Intel without bringing one another in it. So they're kind of tied together for me. As you can see, they go down a little bit. Their payout ratio is only 45.20%, meaning they have a lot of space to grow their dividend over time. And you normally want to see it around that rate, that percentage. I would have thought it would have been a little higher because they've been paying their dividend for a while, but that's really good. Annualized dividend $1.46. As you can see, the technical analysis down here. I don't put too much into what analysts say, even though it does affect the stock price over the long term, because I know analysts, they could go back and forth. And it's for money at the end of the day. A lot of it's for their own benefit. The reason why they switch their opinion and they put it publicly, they want to manipulate their stock price. That's what I believe. So always be aware of that. Always be aware of the risk. Be aware that analysts what they say can affect the stock price. Always do your due diligence for yourself and make sure that you're investing a reasonable amount. You're not investing in too much to where you got to invest where you feel comfortable. And you can't sell just because you're emotional, because if you make a decision based off emotion, most of the time it's going to be the wrong decision. So always think about it. And, invest in the companies that you know and love, opposed to something that you don't know. Like Intel, I use a lot of the computers. Like I've been using Dell's for forever. They have the Intel chip inside. I know Intel is branching off into artificial intelligence. I think it's a small portion of their business, but I think they can grow that segment of their business in the long term. And I think they will be in a better position like 5 to 10 years from now. Like right now, the earnings have been hit significantly over this past year. I believe they will get better and they will grow over time. They will get back to where they once were and even better. I mean, look at the stock chart real quick. So over the last 5 years, they're much lower than what it was. At their highs, hold on, let me see if I can get it right. Their highs were like $69.29. And even if you go further back, they weren't even at these levels where they're at now. They were at these levels in like 2014. They got up to these levels. They were near these levels around 2007. 2003, as you can see here, the charts go way back. They were more than they are right now. So take that for what you will, but I believe that this company will do well, and they've done more revenue and profits since 2007, 2003. They've grown as a company, and they will continue to do better over time. That's just I just wanted to do this quick video just discussing Intel. The reason I bought it is because it's undervalued, and I love and believe in the company, and also because it pays a dividend, and I'm a dividend investor. So I encourage y'all all to do your due diligence. Like I said, I'll see y'all later. Y'all have a great day. Love y'all. Don't forget to like, comment, and subscribe if you enjoy the content, and I'll see y'all next time. Peace.